Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Monday, May 11, 2015, and the question bar is open, folks. If ever you have any questions, feel free to ask them. On the markets today, the big news came out of China, where China has decided, first of all, to lower its target rate, its key rate, by 25 basis points to actually support its economy. They also decided to lower their deposit rate for banks, which means that banks, if they put their money at the Chinese central bank, they will earn less money. So it's a way to stimulate banks to allow them to lend more to companies that will allow them to generate more interest out of those loans. So this is actually some news that will allow eventually the Chinese economy to grow at a faster pace. In Europe, what we had today, we had Greece that finally made its payment of 750 million euros to the IMF. However, concerning the agreements for the next tranche of the payments that will come thereafter, though, they're still negotiating. So good job for the first tranche of the second tranche of 750 million euros, but there's still other steps on the line that need to be ironed out in the agreement. Now, concerning the market situation here, we have the American markets that still remain neutral within their sideways formation of Friday. So it's again a market where for swing trading, it's not an opportunity yet. The TSX so far has been the one that took a biggest hit. At opening it rose, but we're saying on MarketGurus.tv that it's almost impossible for the TSX to rise as much while the American markets stay neutral. At a certain point, one index is going to join the other. So this is actually what happened in the TSX. The sectors that took the biggest hit are, first of all, the mining sector, the energy sector as well. Took a big hit. If we take a look at the energy sector, though, we have the sector that actually still remains neutral. So definitely we're not in a situation where the stocks have reached a bottom on the energy sector. It's still a sector that's totally neutral, where there's nothing to do. And concerning natural gas, I want to make a follow-up on that, because on Friday, it did confirm a clear breakout, clearly got out of this important downward corridor. Now it has a slight correction. So let's say you open some bullish ETF on natural gas on Friday, such as HNU on the TSX or UGAS on New York. Hold on to those ETF though, because you have to tolerate that correction as long as UNG doesn't go below 13.90. So if you bought HNU or DGAS or UGAS, sorry, you hold on to those ETF. Now, let's take a look here at the sectors that help the movement. On the Chinese rate cut, well, we had some Chinese stocks that remain active. Tuniu is pursuing its rally. Canadian Solar, also another company that's also pretty active. Could be considered a breakout for Canadian Solar, clear breakout. However, there's still an important resistance that's that 42, so potentially it's kind of limited there. Sina could break out higher than 44.72. STV, I think, is one of the best breakouts for the Chinese companies. STV on New York, 415 as your exit point on the reversal of this upward trend. Weibo could be next on the line, higher than 1730. Chengyu, well, the thing is for Chengyu, it's a buy, but you trade that stock. So this is an upward trend from that bottom of April 17 to here. So you put your exit point at 31.53. Zhaopin could start a breakout, but look, 28,000 shares being traded, so forget it. Sohu, yes, higher than $70. And AeroMedia, no, there's still that top that's there, so I kind of don't like that sideways formation though. For me, as long as it doesn't break $5, I'm not a buyer on that stock. Wuba, higher than 80.53 will be interesting. And Kunyar Cayman Island, higher than 50.63 will be interesting. So those are the Chinese stocks though. All the ones you see that are highlighted with an S are all Chinese stocks that definitely should be watched for an eventual breakout here. As I said, STV and Canadian Solar are the few breakouts that we have in the sector. And for me, STV is one of the best breakouts so far among Chinese companies. Elsewhere, we have silver stocks that took a hit because when Greece made the payment, it kind of calmed investors' fears. So silver took a hit on the downside. But silver stocks were able to slightly resist. We have no breakdown yet on the sector. Pan American Silver stays neutral. Silver Wheaton stays neutral. So just like the gold sector, silver stocks are not in a situation where you should buy them. They remain neutral. There are just stocks that you should put on your watch list, just like gold stocks. We also had some stocks in the steel sector as well, though, that broke out at opening. We have Rio Tinto here that is a clear breakout. AK Steel Holding, a clear breakout. However, with the mining sector that's losing its upward momentum, those breakout, though, are not of quality. So you definitely have to consider that if you want to buy those stocks, what are they doing in their intraday chart? So, for instance, AK Steel Holding, a breakout, right? It's a buying signal. It's breaking a resistance. Okay. However, if during the day you have AK Steel Holding that goes below 544.45, that will erase almost all of today's gains, and that will definitely be a confirmation of a false breakout. So you have to take that into account. United States Steel, it's a breakout as well for that stock, but look, there's a target of what, 27 on the United States Steel, so there's some percentage to be done, but yeah, except that there's this moving average that's there that could block it. So yeah, if it maintains its gain during the day, so far it's doing well. For a short-term trade until 27, okay. Labrador Iron Ore also, but the thing is with Labrador Iron Ore, look, there's all that resistance that's there. There's also a lot of congestion here with the 100-day moving average. So for me, this is something that's not that positive on Labrador Iron Ore. But let's say you want to build up your long position right now on that stock, exit point $14. That could be a strategy too on Labrador Iron Ore after the Chinese rate cut. So steel stocks remain active. This is a sector that's moving after the Chinese rate cut. As I said, there's a Rio Tinto, AK Steel Holding, which are a breakout. Commercial metals could be one higher than 1677. And also Chinese companies, the ones with an I are the ones that are breaking out, and the ones with an S are all stocks that you should watch for an eventual breakout. So this is actually the list here that you have, and this is where we have a slight movement on the market today. Now let's take a look at some news, some questions here. So BB, you bought BB BlackBerry this morning. Actually, BlackBerry is still among a stock that we are recommending among our day trade on marketgurus.tv. So if we take a look here on marketgurus.tv, we still have BlackBerry among our day trade. So on the TSX, BlackBerry is there among our top 5 intraday stocks. So BlackBerry, we bought it at 12.18. Okay, So what, around here, I suppose, this area, 12.18. Okay, what happened? Well, what happened? The stock rallied since. What happened? The stock has some buyer's momentum. Look at the stochastics. What happened? Well, there's the 10-day that is about to cross the 30-day moving average, which is positive. What happened? We have the histogram that's starting to be in positive territory. So those are all the factors that happen that is helping BlackBerry to pursue its rally. Now, was it a good entry point? I believe so. You bought at the support, you bought at the bottom. Good thing. The risk is that there's a resistance that's there at 1264 where BlackBerry might pause. So the thing is it for day trading, Luke? That's the question you need to ask yourself. If it's for day trading, well, if you make a 2-3%, take some profit quickly in BlackBerry. But if you're buying today and are willing to hold onto that position, to that stock, well, the risk is that you might stay there stuck within this resistance and the support for a while on BlackBerry. We might break it out, right? Because we do have the momentum indicators that are bullish. However, nothing says that BlackBerry could not rally. The stochastics test that downward trend here and go back down. So that will confirm a bearish momentum. So this is why I think on BlackBerry you bought it here. Good thing. However, whenever you make a 5-6%, take some profit. The risk I see is this resistance as that 1273. But the good thing I love is the stochastics that's there. That's positive. That's showing some buyer's momentum. The 10-day that's about to cross the 30-day moving average. So it's the red one that is about to cross the 30-day in yellow. And the histogram that is starting to be in positive territory. So there's some momentum on BlackBerry. And you got in at a great entry point, Luke. So you can applaud yourself for that. But make sure you're quick to take some profit. And I see a risk of a pause around 1266 on BlackBerry. Now, Andre has a question here on EWJ. Is it a buy? Well, it's a clear breakout, Andre. Technically speaking, yes, it is. Now, the risk on that stock is that it's not really liquid, right? So, see, for 30 minutes, we had no trade on a stock like that. Okay, it's a breakout. It's kind of risky. It's kind of risky for that stock, but it's a buy. It's a buy, but it's too risky because of the lack of liquidity and also the surge of 22%. For me, I don't like it, but it's a buy.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So I hope you answer your questions, Andre. It's a tough one for EWG. That's the type of stock that we would not recommend among our analyst choice portfolio because of the lack of liquidity, because of the surge of 22%. That's not a stock that will fit on marketgurus.tv as a pick for analyst choice. However, it's a buy. Yes, we would have put it as a buy. We would have put it as a breakout, but it's a high risk. So if you're willing to tolerate that risk, or there's a big loss potential on that stock, this is what you have to take into account if you're buying that stock today. So that's a decision that you have to take depending on your risk tolerance, Andre. You have to take that decision. Now there's a question here, a comment, I would say, by Z. The market's being so inert, would it be better to use weekly charts rather than daily charts? I think it's a great statement that you're making there, Z, because yes, indeed, we have markets that are so neutral. Using a weekly chart, allows you to have some perspective. So as long as we remain within this important side of information on the NASDAQ, the Dow Jones, some investors are just staying on the sideline. They're just holding onto their positions because markets are so inert. And even in terms of money to be made, like the money to be made is if we're shorting some positions on MarketGurus.tv, we know that it's for short term. So if we're shorting at the top, well, we know that whenever markets, the Dow Jones reaches 17,565, it's a point to close those short positions. On the TSX, for instance, also, look, we have a clear neutral formation. So for those of you who have a more medium to long-term perspective, you might say, you know what, I'm going to only consider to buy some positions on the TSX if ever I can see the TSX breaking this important resistance of 15,622. For those of you who are more active, would like to trade within this side of information, well, there are some possibilities. On the TSX, for instance, on MarketGurus.tv, we have opened some short positions on the TSX, especially on HXD, because we believe that the TSX bearish cycle could stop towards 14,750. At this point, we will have a rebound. It's highly possible. And if we have a rebound, we're just going to close that position. So, for instance, HXD, right? We have not been able to make some money yet on that ETF that we recommended here. But if ever the decline continues, well, we think we'll be able to generate a profit around 475 to take some profit on that. And that will be the end if ever we will close that positions. I mean, if ever we have the TSX that at 14,070 stabilize and start to confirm a solid rebound. So it depends on your horizon, I would say. For short-term traders, usually daily charts still make the case, but if you're more medium to long-term, I think using weekly charts is also a great alternative. And by having markets breaking an all-time high, that is a signal that we might be in for another bullish cycle. And so far, that's not what we have. We have markets that remain totally neutral. Earnings growth are not that great. Economic indicators are okay. Good news with Europe, with Greece that did their payment. Good news with China that cut their reserve ratio, but still we need growth to spike up. We need wages to go higher, and so far it's not what we're having. It's still a fragile recovery, right? Even if the economy is growing, but it's still fragile. So those are the facts, I think, that makes investors kind of nervous to not get out of this, to not make markets get out of this neutral range. Now, looking at Ford on a call option, do you see this price as a good entry point? Well, I don't have the call option in front of me, so I won't be able to actually answer that question concerning your call option. But for me, will Ford be a buy? Ford will be a buy if it goes higher than $16. Right now, we can say that Ford has confirmed a bottom, right? Because the stochastics are clear that the buyer's momentum is there on Ford. However, there's a lot of congestion there. At the $16 resistance, there's the 200-day, 50, 100-day moving average that all meet there. So at $16, I expect a pause on Ford. And this is why I'd like to see the stock breaking that $16 resistance to confirm a clear breakout. I think why Ford took a hit is because of their sales, and that's not been that great. And so the stock took a slight hit. But really Ford, Ford is confirming a bottom. I think that Ford will only be a buy at $16. For me, I have a more positive opinion on that company. For Ford, I think their models are great compared to other American models. They have not had the bailout compared to other companies when the crisis happened. So for me, Ford, it's still a nice company, even if they took a hit with their sales. But at $16, for me, that would be a buy. So that's my advice on this, Sal. But concerning call option, I cannot answer that because I don't have the call options in front of me, and we don't use it a lot on MarketGurus.tv. Now, concerning our day trade of the day, it's that stock here, NES on New York. Look at this. The stock clearly reversed a downward trend here. And look what happened with the stochastics. If we put the 923 stochastics here, you see that we had exactly the conditions to confirm a strength of the bullish momentum. Heading towards the overbought situation, volumes were increasing, so that was a clear buying signal. Another one here came on NES, another one here came on NES, and also another one. Now we're overbought, heading down. I believe we're going to stabilize for a while. The new entry point is going to be at 488 on NES. So NES has been our day trade of the day. Also, BlackBerry, we're monitoring that stock too. It's also on our day trade, but so far, BlackBerry, as I said, at 1270, this is 1266. This is where I expect a pause. So today, folks, overall, we had some Chinese stocks that rose after the rate cut by the Central Bank of China. Some stocks also in the steel sector, but the breakout's not of quality because you saw how the mining sector lost its upward momentum. So make sure if you want to buy some steel stocks today, make sure that intraday wise that those stocks can keep their upward momentum. Gold, silver took a hit after Greece made their payment. However, the gold stocks and the silver stocks remain neutral. It's still not a sector where you should buy any positions. Sectors are neutral, the markets are neutral, and even the energy sector is neutral. So for swing traders who want to buy the resources today, it's still not a resources game, except some stocks in the steel sector. But as I said, the breakouts are not necessarily of quality because they're going up only on Chinese rate cut, which is not a widespread movement, and that doesn't confirm that those rate cuts will lead to higher growth. So this is actually the risk that you have if you're buying some positions today on the steel sector. So that said, see you tomorrow at 12:30 on the Swing Trading Show on DecisionPlus.com.